New. Discover smarter finance opportunities.
Day trading versus long-term investing.
With varied and diverse views on different ways of investing, let us help you quickly get a go understanding of day trading and long-term investing.
Well, as the term suggests, in a day trading, a person buys and sells an asset, a stock, or a Bitcoin in a single day with an intention to take advantage of small price fluctuations leveraged over past investments. For example, a 1 rupee price increase in a 100 rupees stock can give you rupees 5,000 or 5 lakh rupees transaction.
While this short-term gain might seem really exciting, there is an equal risk involved in day trading.
Professional day traders use super expensive software, hardware, and new services and commit a large amount of time in learning to do it. Also, leveraging small price fluctuations requires investing a lot of money. And if the trend goes wrong, it is very likely that you make equivalent or bigger losses. Long-term investing allows you to evaluate companies and manage your risks by buying the stocks at the right price and strategies to sell them at the appropriate time in the long run.
While each method has its own benefits and drawbacks, it is imperative that you evaluate the risk, weigh in the benefits, and select your style of investing depending on your investment goals. Ready to get started? Invest with New. Download the New app now.